Hi, good afternoon everyone. My name is Ram Dhamija. Welcome to my channel. Today is 20th of March and today is Nifty Expiry, and it has been a very good day for the markets. The markets actually are right now as we speak, and there is still about 20 minutes to go. It's up almost 1.2% on the mainline indices, and the broad-based indices are also holding up well. So it's been all in all a good day, and the last few days have been really good for the markets. I will take you through how the expiry went today, what are the key things, what are the highlights of today, how the markets are behaving, what is it looking like for the weeks going ahead, and lots more to talk about what the world market is looking like, etc. So let us start off with first how the markets opened today and how they have behaved. So this is the Nifty 3-minute chart. As you can see that we opened in the morning somewhere around this level, which is about 23,000, and then we shot up, but immediately post that there was a sharp downfall. Now this was just, I suspect, a move to take off all the puts in the system, because eventually all the calls were taken out after that, and the market just shot up from 22,900 to now almost 23,200. And this blue line, this sloping blue line we have broken. I will show you what the significance of this particular line is, which we'll come to see in the daily chart. Now if you see, this is the daily chart for Nifty, and this blue sloping line was the lower lows, lower high line. Now this is a downward sloping line. It connects all the lower highs that were made, and it was very critical that we crossed this to break this particular pattern, and we seem to have crossed this convincingly today, uh, until unless we close down from here, with the possibility of which actually looks impossible right now if you ask me. So this basically indicates that there is some strength which is coming in the market. The first resistance was 22,700 odd, which we crossed smartly, and then after that there's a sharp move. Every day the markets are going up. Of course they are being aided by the world markets, which are behaving well, but this particular sharp move is something that is basically showing the inherent strength in the markets. Now, how was Nifty expiry today? For me personally, it wasn't a very great day, because my options, both side got stop losses got taken out on Nifty. Though the month has been flat till now, but today wasn't particularly good for me. I know it wasn't a very difficult day per se for option sellers, but my system today could not make money for me, simply because there was a very wild movement, and also for the fact that Nifty straddled opened at 105 today. Now it closed at about 140-45 yesterday, and there was an overnight Fed event, which was actually a non-event because the Fed did not do anything, and it was not even anticipated to do anything. But today morning, the crush in the premiums was so high that there was actually nothing left for the option seller. So I mean, within, I guess, 10-15 minutes only, the put stop loss went. Sorry, first the call stop loss went, and then the put stop loss went in the down move. So it was all in all a forgetful day. But what typically happens on such days is that if you are well hedged, so for example, I trade other indices as well. I trade Bank Nifty. Now Bank Nifty is giving good money today, right? Simply because it did not move beyond certain bands. So if you're well hedged across different instruments, then you can absorb even big movements or losses on one particular instrument that you're trading. So Nifty today wasn't great for me, but it's okay. It doesn't matter actually, because at the end of the day, what matters is what your monthly PNL is, what your yearly PNL is, and if that is in green, if that is good, if that is what you're maintaining a good ROI, that is what matters. So day to day, month to month PNLs, week to week PNLs actually don't matter. What matters is how consistently you're making money. Having said that, there is a peculiar behavioral change that I'm seeing between February to March. February, what was happening was that post budget, there was a drop in volatility, especially after 15th of February, 15th to 20th of February. So the last 10, 8, 9 trading sessions of February were fantastic. The kind of profit that they gave for my kind of a system is the kind of profit that you generate in 3 months. So there are phases like that when your system will throw a lot of points at you, and there will be phases like, for example, March has been a very dull phase for option selling, simply because there's just no premium left, and the markets have just been going nowhere, and then they have picked up steam in the last 10-15 days. So for option sellers it's becoming very difficult because the premiums are just not there. But having said that, if you are able to ride out these kind of months, October was a rough month and March is turning out to be a okayish month. I mean, as of now it's kind of flattish, but if you're able to ride out such months, then there will be very good months like February, which will basically take care of 3 months or 4 months of profit. So in my opinion, if you have a very stable system, and if you're able to generate, let's say, 2 to 3% a month, I would consider that very, very good for option selling. And it also depends what is the kind of risk that you're willing to take. If you're willing to take a 5% drawdown, are you willing to take a 10% drawdown? So a trader like me, I do not prefer anything more than 4 to 5% max drawdown, and that too very rarely my system will hit. So if you're able to generate 2-3% a month with 3-4% kind of a drawdown, it's ideal according to me. Of course, there are people who generate 100% returns, or they claim to generate 100% return, but they are willing to take 20-25% drawdown. That kind of approach, I think, in the long run will not work out. So lesser your drawdown, the better it is. Anyways, now coming back to how the markets have been. So markets, as I have been saying for a long time, markets kind of reversed somewhere over here, and it's been now about 8-10 trading sessions that we have actually made that reversal. And I had said that earlier, that markets will go up, then they will take a pause, and then immediately they will shoot up another 800,000 points. And this is what happens during a fall also. You can see over here there's a fall, consolidation, and then the fall is very severe. So right now we are in that up phase. Okay, once we finish this leg of up move, then we are going to consolidate for some time, then either we go down or go up, but that movement again will be very sharp. So let's hope that we do not go further below the low that we had made of 21,800, 900 odd over here. But time will only tell, because bear markets typically don't. And why I call this a bear market is because most of the stocks have fallen 50-60%, or at least 40 to 60% they have fallen. A lot of stocks. So typically bear markets don't end just like that. Yes, we might not break the lows, but surely we might be in a time correction. So one has to be prepared for all those scenarios. Now let us look at how the indices are placed compared to their 52-week numbers. So this is from the 52-week high. As you can see, a lot of recovery has been made. Fin Nifty is almost reaching its 52-week high again. Surprise, surprise, just 3.5% down from there. Banking is almost 8% down. Nifty is now coming to respectable levels of 10%. So it's right now at 11.6%. It had gone to minus 16% at one point in time. Mid cap is at minus 15. Nifty next is now come below 20. It had gone to 26-27%, and small cap is also below 20. So you can see how quickly things can change within a matter of few days, wherein all these indices have gained almost 15% from their bottom. Like a index like Alpha is now showing 27%. It had gone to 37%. Now 37 to 27 is not 10%, because 37% down, and now it is 27% down. So it has covered about 12-13% from the bottom, if you calculate it, because this is from the top. So this is how sharp the movements are. Now let us look at how the heat maps have played out today. This is the Nifty 50 heat map. So there were some good big gainers, like Bharti was a big gainer at 4.2%. Then Bajaj was 2.5. Titan was a good gainer at 3.7%. Britannia at 2.6. In terms of Nifty next, we had Varun Beverages, which was up 1%, Godrej 2.5%, ICICI Pru 2.8, Havells was down minus 3.5, Vedanta was up. So metals have been doing well recently. And in terms of the broader indices, we had a lot of winners, like Max was up almost 5%, BPCL up 2%. Then some chemical names were like Fluorochemical was up 4.2%. There was Polycab, which I think had a problem today because of the announcement that it is going to face competition from a very big group coming in. Thomax is up 4% and so on. So it was a mixed bag, but mostly in green. Now let us look how the indices have behaved today. Now if you look at the ones that have performed the best, auto, infrastructure, and IT is trying to make some sort of a comeback along with FMCG. Nifty, as I said, is up almost 1.2% now. And in terms of the negative indices, there was none except for VIX, which is down by 5% now, which is good. Downward VIX indicates that the markets are stable and they might continue the run up going ahead. Now let us look at how the world markets are poised. World markets have been absolutely fine. There's been just been no problem. US 10-year has fallen a lot, which is good. It's at 4.2. So more the US yield 10-year falls, the higher the chances that the inflows into emerging markets will actually start. And I'm going to take you through, if you look at this particular chart, this is the FII selling chart. Now, as you can see, this particular month till date, they have sold 25,000 crores, whereas DIIs have bought 36,000 crores, and that is where you are seeing the mismatch happening between buying and selling, and hence, the markets are also reacting accordingly. So you just see their selling has reduced. Like 18th of March, they bought 1,400 crores. Then yesterday they sold only 1,000 crores. Earlier they were selling 4,000 crores every day. So that selling reducing itself has had an impact on the markets going up. So this is what happens now. Imagine if FIIs also start buying, then where the markets are going to go. But typically that happens during bull phases, and when market is making new tops, that is when everyone is buying. Now coming to yesterday, Nasdaq closed up. This was after the Fed announced that no rate hike or rate cut, which was treated positively by the markets. Also, the Fed commentary was fine, so that's why there was no hawkishness in their commentary. So the markets reacted accordingly. Bitcoin has gone up, which indicates the liquidity is there in the system. Dollar index is holding down, which is good again for the emerging markets. Now Brent is at 71, which is fine, and our currency is at 86.3, which is fine again. Gold is now, it seems like 3,000 is the new bottom for the gold. It's holding up there. So even in INR, it is making a new high every day, almost touching 90,000. Silver is at 34, which is again an all-time high for it. So world market cues are absolutely fine. Our markets have recovered a lot from the bottom. So if you look at it, we are almost up more than 1,000 points, from 21,900 to 23,200. It's almost 1,1300 point kind of a recovery, which is very, very welcome. The small, mid cap, alpha, momentum names are all up between 10 to 15% within a blink of an eye. So anyone who missed this particular up move, would have missed out a lot already, because the markets were extremely oversold. And at that point in time, it required a lot of courage to go out and buy. And that is where I maintain that if you have systems in place which will trigger your buys, which will tell you that this is the right time to buy, or if you have SIPs in place which will ensure that you buy irrespective of the market conditions, and then you top it up whenever you see a market is correcting 15-20% down, then there is no power on earth which can stop you from making money. Because if you stick to discipline, if you stick to a system, if you invest through mutual funds, if you invest in good quality companies, if you invest in indexes, if you invest in ETFs, I don't see any reason why you will not be rewarded handsomely by the markets. It is just that people sometimes, tend to destroy their wealth. They will put 50% of allocation into small cap names which no one has heard of. They will put huge amounts into fancy names. Now, I don't want to name companies, but a lot of companies came out with their IPOs, and right now they're trading at half what their IPO price is. And every day there is bad news about those companies. Sometimes there are quality issues, sometimes promoters are selling. I mean, you just name it. So for retail investor, it completely makes sense to go via the mutual fund route, to go via the ETF route, to go via the SIP route. Don't try to time the markets too much, because it's very, very difficult for anyone to call the tops or the bottom. It is your asset allocation which is going to make you money. You are seeing what is happening in gold. Anyone who had asset allocation, excuse me, towards gold will be very happy right now. I have always maintained that 10 to 15% of your allocation should be in gold. That helps you. If you had international stocks like Nasdaq, S&P and all, that have really done so well over the last 1 year. So asset allocation, investing in good quality, investing in mutual funds is something that you should definitely look forward to. And as I maintain, if anyone is interested, please fill up the form. I help people make their mutual fund portfolios. I'll be very happy to assist you in making one. And I'm very happy. I get calls almost every day wherein I talk to people, and it's a nice feeling because everyone has got a different aim, different goal in life. So we discuss how we can reach that, and then I offer them the solution, and they're quite happy about it. And all of them ask, how much do you charge? I say, I don't charge anything for that, because I'm a distributor. I get my commission from the AMC, so I don't charge anything. So just in case anyone is interested to make up their mutual fund portfolio, please, they can fill up the form and I'll get back to them. So that's it. It's been a good day. It's been a good month for the portfolio. I'm sure all your portfolios would be up if you are invested in quality, if you're invested in good companies, if you're invested in mutual funds. You'll be very happy right now because the rise from the bottom has been spectacular. If you have been in the right instruments, you will see your portfolio going up more than the market has been going up. So that's a very good feeling. That shows the strength of your portfolio. I always maintain that the way to check your portfolio strength is to see how much is your portfolio falling on crash days, whether it is falling less than the market, and on up days, is it able to beat the market or not. So even if your portfolio is falling less on crash days, it is, I would say, a sign of strength of your portfolio. There are various ways to ascertain how the strength of a portfolio is. But having said that, the last few days have been very, very good for portfolios, and all the hard work that we had put in over the last 3-4 months, wherein I was, me and all the clients and all the other people also have been buying these dips, have been sufficiently rewarded. Even in the last 10 days, I would say, lot of the portfolios that have even started in the last 2-3 months are now flat to green already, and the market is still down 12% from the bottom. So that's it from me now. Looks like a fine day, fine week now. Only the last week is left and the year is over. So if anyone has to do their tax optimization, this is the right time to do that. If anyone has to rebalance their portfolios, this is the right time to do that. So I'm not expecting much out of next week because it's going to be slightly more volatile. But it's been a good year. It's been a very good year. Though March has been okay, but the year has been very good in spite of all the challenges that we have faced in terms of the lot sizes and new rules coming in, etc. There's been no complaints, I would say. So it's been a good year, and I'm hoping that going ahead, the next year will be equally good or even better. So that's it for me now. I hope you had a very good expiry because I don't see it was too difficult. But if you are just trading systems, then sometimes the stop losses will get hit. Otherwise, for discretionary, I think today was absolutely fine day. So I hope you guys had a good day, and I shall see you tomorrow. If you like my content, please do subscribe to the channel. It's a request, and do share the video with people who might like to see what happens in the market. I shall see you soon with another update. Take care. Bye bye.